Hi, my name is Will English. I own English Management Solutions. We are a QuickBooks reseller located in San Diego, and we specialize in the retail industry for over 20 years. Today we're going to talk about 3 keys to turbocharge a retailer's performance. Hope you enjoy. Today's agenda is as follows. We're going to talk about reporting, including the top 5 reports that I think that every retailer should pay attention to. Since we are specialists in QuickBooks Point of Sale, I will be using that product to show you how to run those reports. Next up, buying plans, including open to buy, which is a very standard way of creating budgets for your inventory buys. We'll give you an example of what that looks like. Last up, since retail is all about inventory, we're going to talk about how to create proper discounting, promotions of inventory, as well as finishing up with physical inventory, because after all, we need to know what it is that we have in stock for the rest of this to work. So these are the top 5 reports that I think that every retailer should pay attention to. In the upcoming slides, we'll go through each of them and again show you how to run those in QuickBooks Point of Sale. Stock turnover rate, also called inventory turns, is a way of measuring how well that you're managing your inventory. For example, if we have an average inventory of 100,000 and the cost of goods sold was 500,000, we have turned our inventory 5 times. Typically, the higher the number, the better. It's important to consider how your department structure is to be able to determine turns by department. Also consider that seasonal items should turn faster than staples. And lastly, items that turn faster need to be ordered more often, so you need to make sure that you consider that in your buying plans. We have a lot of garden centers as clients, so consider the fact that if a garden center has a department called trees, most likely that department is not going to move as quickly as one that is called seasonals, or those plants that you're going to plant once a year as color. This report is actually quite easy to do in QuickBooks Point of Sale Desktop. You choose Reports and then under Items, Inventory Turns. I'm going to show you how to change the date range in a moment or so, but to do that you would go under File Preferences, Company, and then in the Ratings and Trends change the number of days. Additionally, you can change filters under the Modify just like you can with any other reports. Let's show you how. Again, to run the Inventory Turns report, we click on Reports, and then Item, and then Inventory Turn. You can see here that we haven't been doing much in the way of sales. Look at our current period up at the top. So in order to change that period, we're going to go ahead and close this. We're going to click on File, Preferences, and then Company. We go down to Ratings and Trends, down towards the bottom. And you can see here that we have ratings and trends for the last 180 days. And go ahead and change that to 360 to give us basically a year's worth. We can take and choose up to 999 days, although not sure that that would be something that's really useful, but certainly 3 months, 6 months, 9 months, 12 months would be something that would be appropriate. This also controls ratings and trends for items and customers. That's another tutorial. Now let's go ahead and run the report again. Reports, Item, Inventory Turns. You can see now that our date ranges have changed and we've got some more information. One more thing to show you. We click on the Modify button and you can see that under our Add Remove Columns we have the ability to put much more information in there. So for example, if we wanted to look at a specific item itself, we can go ahead and do that. We can sort by that item name and run. And now you can see that we have the report by every single item if we wanted to look at turns by items. Just that simple to get an inventory turn report in QuickBooks Point of Sale. If you have other point of sale systems, again, remember the calculation, pull the information you need, and make the calculations manually. Next up is sell-through rate. The sell-through rate is a measure of an item or a vendor's performance. So we're going to look at how many items that we've ordered from a vendor and see how well they're selling. Oftentimes vendors will give us special deals, but it's not really a deal if we can't sell it. The formula here is units sold divided by units received, and the closer you get to 1, the better. If you have a low sell-through rate, again, it doesn't matter how great a deal you got, the item always becomes more expensive as it sits on the shelf. Shelf space is very, very valuable, so you need to use it wisely. So here's how you do it in QuickBooks Point of Sale. Under the Reports menu, you have Sales and then Vendor Summary. What you're going to do is you're going to pull a report for a specific vendor showing all of the products that you've sold. Keep in mind though that filters are sticky always, so if you need to change a filter, click on the Revert button under Modify. Next up is the Receiving Summary report. That is under Reports, Purchasing, Receiving Summary. So in our example on the screen, you can see that we've ordered 90 items, but we've only sold 15, meaning that our sell-through rate is 0.166. So this vendor is not very efficient for us, and we might want to consider whether or not we want to continue to place orders with them. Our next Turbocharge report is Profitability by Department. In order for this report to make sense, we have to make sure that we have a department structure that supports our business needs. We do that by deciding what the most important information is that we want to track. Additionally, hopefully your point of sale system will allow you to set up various departments. You also need to make sure that you're doing your receiving and costing properly in the system. I've seen a number of point of sale systems that will not have the ability to do cost properly, or if you're using a system that allows you to put in your costs but you're not receiving costs correctly, that's also a problem. I had a client that had decided that they didn't really want to pay attention to costs at all. Essentially, they were using their point of sale system as a very fancy cash register. After many conversations, they finally decided that yes, in fact, knowing the profitability of what they're selling is important. Also, you want to make sure that the report that you run has your net sales as well as your cost by department. To run this report in QuickBooks Point of Sale, you go in the Reports menu, under Sales and then Department Sales Summary. To add more details, you can click on the Modify button, add Remove Columns, and then click on Margin Percentage and Margin Dollars. In addition, you can click on each column to get a different view. Let's show you how it looks in product. From the Reports menu, we click under Sales and then Department Summary. As you can see, the default is Extended Price, Extended Cost, and Margin. We're going to click on Modify, add Remove Columns, and add the total margin dollars. Note that if I wanted to, I could add some additional fields like vendors and whatnot, and then sort by that. I'm going to save this, run it. Now you see the total margin dollars. Note the green diamond basically means it's filtered by department. If I choose to, I can go ahead and click on margin percentage or total margin dollars to sort by those fields as well. Another important report is sales by hour or perhaps by day of the week. Most point of sale systems I've seen will have this report or something like it. It is critical to be able to use this to figure out how to staff your store. You want to make sure that you have enough people in the store processing sales so that people don't get frustrated and walk away. Also, you need to consider if you've got special events. I have a client that has a store near the San Diego Convention Center, and therefore she keeps an eye on big trade shows and knows that she needs to be able to staff up for those. In order to do this in QuickBooks Point of Sale, pretty straightforward. You go the reports and then dashboard, and one of the main reports on the dashboard is sales over time. If you choose to, you can modify the report by clicking the modify report button, and then you can change the hours or you can format the graph different. Next up is GMROI, sometimes pronounced GMROI. It stands for Gross Margin Return on Investment. It measures if the products are earning enough margin to justify your investment in them. The formula calculated is the gross margin, the specific item or department, divided by the average inventory at cost. You want to consider that this is a measure of how much that your inventory dollars are earning for you. As with all investments, you want to make sure that your dollars are working as hard as you do. So let's step through an example. A formal dress department has an average gross margin of $150,000, which is the sales minus the cost of goods sold. And the average inventory is $95,000. Therefore, the GMROI is 1.58, meaning for each dollar I spent, I got back $1.58. By contrast, the casual dress department had the same gross margin, but the average inventory at cost is only $80,000. Therefore, my GMROI is 1.87. So, I might want to consider buying more casual dresses to make sure that I can maximize my investment in inventory. In order to find out some benchmarks for GMROI, go ahead and Google them. There's quite a bit of information out on the World Wide Web. And also, make sure that you keep in mind that the higher the turns, the lower the average inventory costs. Therefore, these two measures are related. As I look at small retailers, I find that a number of them have gotten into retailing because they enjoy the specific items that they're selling or they enjoy interacting with the public. You should know, however, that retailing does have a science behind it, and one of the things that will help you to be more effective and efficient is adopting a buying plan. The most common one is called Open to Buy, or OTB. The formula is listed: planned sales plus planned markdowns plus planned end of month inventory minus the beginning of the month inventory gives you your Open to Buy. Keep in mind that the Open to Buy is retail dollars. Therefore, to be able to figure out exactly how much you can spend, you need to be able to multiply that by your markup percentage. Let's step through an example. So if we take the $45,000, which is our planned sales, we add $500 worth of markdowns, plus the $125,000, which is our planned ending inventory, we get $170,500. Then we go ahead and take that and subtract our beginning inventory, which is $120,000. That gives us $50,500. Our margin is 60%. Therefore, it equals $15,150 to be able to spend using the calculation in this example. Open to Buy is best used at a department level. You need to do it at a monthly basis, so consider the seasonality of your inventory. Consider if you're being realistic. After all, garbage in, garbage out. Also, the more you do it, the better at it you will get. If your planned inventory is within 5% of the actual, it means that you're using the buying plan to its most effective capacity.